Welcome to another episode of Limitless Trading. We wanted to set you up for success for the week. Really the month starting tomorrow, April 1st, the quarter ending today. Quarter ended extremely bearish. That doesn't, that usually sets up the year for a bearish year after the summer run, but we'll get that in another video. We had said again, after we caught the short on a 10% correction on tariff talks, that we saw that Powell was going to start becoming dovish to calm the markets. That's his job. Whether he's going to do rate cuts later in the year or not will be based on data that he receives. But his job is to calm the markets. We had said, hey, we're going to come back to 58.46 at least. We were hoping for 5,900. But in fact, the pivot hit on when we said it was Tuesday. We rolled over and we said to everybody on Friday, hey, we're rolling over on bad sentiment report, more tariff talks, but we had a pivot coming up. Because we figured the market was not going to end so red to end the quarter. Market makers were going to try to cover some of their losses from this candle, and in fact, we did. So we have other pivots coming in, but we said, okay, if on the smaller time frame we defend the previous 55.31, that we were going to start squeezing, and this is starting to look like a cup and handle. Now, can it be? Because many people are telling me, hey, this is a bear flag. Okay, the bear flag is failing so far. It came down, trapped all the bears, and is squeezing. Now, what we want to see is follow through. If 55.78 defends on the daily or 56.29 defends, we're going to come back and retest the breakdown of the fail of the 55.75 that we said. Market makers tend to want to revisit the scene of the crime. If 55.75 turns into support, then you were long already with us and you stay long. April has not been bearish in any market. Now, I suspect we're going to be bullish into tax season, then roll over, and then bottom out right before Memorial Weekend. But again, we trade our levels, we trade our dark pools, we trade a little bit of Elliott waves and some other AI tools. But as of right now, the daily support went under, trapped bears, and squeezed up. Now we want to see follow through because the trend is down. This candle, it closed above yesterday or above Friday, which is bullish, but it didn't go all the way above it to completely change direction. What we want to see is, do we open up above 55.78 or at least above today's low and start another bullish trend, maybe a short one, just to recover some of this and create this double bottom, right? Because again, everybody sees patterns, but the market goes up more than it goes down. So you want to be careful shorting oversold, right? I always tell people when we're oversold on fear, you want to go long. You want to short in extreme greed. When we get back up to these nosebleed sections, when everybody's all bullish, everybody's excited, you short that. You short opposite of sentiment. In a smaller time frame, again, we said if 55.31 held, which it did in the morning, our guys took along. We had closed all our puts for Friday. I told guys I don't short over a weekend because some news can come out that tariffs have changing, something goes good, so on and so forth. And we backtested almost the entire drop from Friday. Now, are we completely bullish? No, but this is starting to look like a cup and handle rather than the bear flag that everybody sees. So what we want to see again for tomorrow is follow through. If we open up above 55.78 or 56.29 and continue the uptrend to go back and retest the 55.75 that we lost, that reject. Remember, we had a support that became resistance on the Tuesday that we said, and it was a bull trap on Wednesday. We rolled over Thursday. It was a little bit, a pop that you could take. And Friday confirmed the downtrend. Now today could be a bear trap, but it's the follow through. Do we open up higher? Do we simply open up lower? In other words, if we open up under 56.30 or 56.84 now becomes resistance, then again, this is just bull trappy, right? And bear trapping and bull trapping and bear trapping. The market's going to do this until everybody's gone and they pay the least. So you want to take it one level at a time. You don't want to overtrade because, again, we can go all the way up and back test 57.75 or trap right here, trap all the bulls that covered and roll over, break 46.29 and head all the way back down and go visit 5,400. Everybody's looking for this level or 5,300, so on and so forth. What you want to do is trade the levels. And then again, on the smaller time frame, you want to see, do we start turning, for example, the 56.65 that broke out today, does that become support? Or was this whole thing a bull trap? I always go with the bull trend because we go up more than we go down. But again, we did not clear the entire drop. We didn't break out. We didn't defend, right? So this could just be a little pop here, come back down. And actually, if we defend 55, 65 and trap more bears, then we're off to the races and we turn this into a cup and handle on the smaller time frame. But again, on the daily, if this is a awkward bear flag, then we would see this come up to 57.75, 58.64, reject again, and topple over and flip over. But take it one trade at a time. Don't assume a level is going to go up. If a level holds, take your long risk on. If a level fails, you go ahead and short. But you don't want to show short fear and oversold RSI. Or if you do, keep it very tight, because again, everybody that was telling us, oh, we're going to roll over, Friday was bearish, you got killed today. You're still holding your puts. Doesn't mean you're dead in the water. If you shorted at 57.75, you're short, it's still green. But if you shorted today thinking that you missed out Friday, that now you're in the hole and you have to wait it out or cover. If you like the content, please subscribe, like, and comment Discord, or email us, and we'd love to have you join our Discord.